The snow was on fire today. Shares of the cloud-based data platform provider Snowflake were up over 13% after the company reported stronger than expected quarterly operating performance. Does that mean that the shares of Snowflake will continue to remain on fire, or could the gains in Snowflake gradually melt away? These are the questions we'll address in today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, we're going to be taking a look at Snowflake, symbol SNOW, and going to be looking for clues as to where the big money might be stacked up, patiently waiting for a pullback for a bounce trade or a lower entry price for a longer-term position. The way we're going to do that is we're going to be looking for support levels, and since we're emphasizing the bounce trade in this particular example, I'm going to change the time frame on candle formation to 15 minutes and go look for the support levels. And there is a support level right here, our first support level in the 198.78 to 196.73 price range. There happens to be another support level just below that, down to the 194.60 price range. So when I see two support levels stacked up on top of each other, I'll combine the two and call them one support level and try to construct a trade, assuming that's just one support level. Now let's go take a look for resistance levels, and we have to go way back to go find a resistance level. And our first clue of resistance in the chart, technical resistance, would be all the way up here in the 229 to 238 price range. So there's a huge gap between these support levels and even current price and the first technical resistance level. And when there's a big gap, you can think of that as profit potential. So it looks like there's a lot of profit potential in this trade, in this chart here. So let's go try to construct a trade. The way we'll do that is we'll simply place a buy limit order at the 198.78 price point, have a protective stop just below the bottom support level, and we can drag our target all the way up to just below the first resistance level in the chart. And if we do that, we'll notice that this trade setup has a 7-to-1 reward to risk ratio. In other words, for every $100 worth of risk you would take, you would have $700 of potential reward. Now that is ideal. So let's go see how this trade might play out. So there's a few ways this trade might play out. Snowflake reported a strong quarter, so this stock could just continue heading higher and not look back. If that's the case, we simply won't get filled. We're not going to chase Snowflake. That's not the kind of discipline that professional traders have. So we're going to patiently wait for a pullback. And if we don't get one, we simply won't lose any money. It'll be opportunity cost, but we won't lose anything. But we'll have our buy limit order sitting at 198.78, protective stop just below the bottom level, target just in front of the first resistance level, and ideally Snowflake would do something like this, which is pull back, take a breather, pull back to our support level, and bounce off that support level before heading higher to the next technical resistance level. So let's wrap up today's session, folks. Hope you enjoyed the session. We found a trade setup with a 7-to-1 reward to risk ratio, which is one of the better looking setups we've had in the last week or so. So going forward, every day I will be doing more chart analysis. In the meantime, I wish you the best of luck in your trading and investing, and we'll see you soon.